Hello traders and welcome back to Smart Money Insight. My name is Rein and today I'm so thrilled to talk about an exciting opportunity that this stock recently dropped about 16%. But wait, I'm not suggesting you to short it further to profit, but make sure you listen carefully till the end of this video so you don't miss out any detail on how to potentially achieve a 15% return. So before that, let's take a look at this short clip.
Micron shares plunging this morning, as you can see, almost 15 or over 15%. The company's earnings were above estimates. Revenue was in line, but then the guidance for the current quarter came in weaker than expected. The company said that consumer-oriented markets will be weaker near term. Does expect a return to growth, though, in the following 2 quarters, but you have to take their word for it.
Yes, we're talking about the Micron stock here. And for those of you who are not really familiar with Micron business, well, in the past, Micron technology primarily focused more on producing memory chips like DRAM and NAND flash, which is essential for consumer electronics such as personal computers, smartphones, and storage devices. But I would say that this business has a limited growth potential. So today, Micron has shifted its business focus more towards a cutting-edge market, particularly in artificial intelligence, cloud computing, and data centers. And this industry requires high-performance memory and storage solutions that are capable of handling massive data workloads and supporting rapid advancement in AI and machine learning. So I would say that Micron did a strategic move, a pivot, just to reflect the changing of dynamic of technology world where AI is becoming a very dominant force today, and Micron is also positioning itself as a critical enabler in these transformations. Well, the good thing and the bad thing here is that Micron just took a significant hit yesterday, dropping about 16%. And the reason of this plunge is simply because, well, the company forecast on quarterly revenue and profit was below the estimates due to a weaker demand for consumer-centric products like personal computers and smartphones that, well, definitely impact the chip makers' business. And I would say even some analysts predict further drop from the current price. And this is where I would say the opportunity comes. Well, because when you look at its underlying fundamentals here, the disappointment comes from the worse than expected outlook for the more cyclical side of the business like smartphones and PCs. But AI data centers is more secular than cyclical type of business. And in addition to this, Micron should be able to balance the supply and the demand by simply adjusting their production levels to better match the current market needs. And this strategy should be able to help them to stabilize prices and as supply conditions normalize. And this is why Citi believes that it is still a good time to buy Micron despite the current challenges. Damn! And if the market has overreacted to this 16% drop, this simply means that the stock could be poised for a rebound. And that could mean that traders may find Micron at a much more attractive valuation today.
Oh my God! Wow!
Especially if we see signs of stabilizations in memory chip prices or an increase in demand. So let's dive in more and take a look at Micron price analysis. Now let's take a look at this Micron technology price chart, and we're just in the weekly frame. And looking at this big picture, it's kind of clear that the stock is still trading within ascending channel over the long term, represented by these black color trend lines. So this long-term trends reflects the company gradual growth riding on the booming semiconductor industry. Now another important and pretty prominent channel here is going to be the green colored channel, trend channel over here. And the reason why I kind of label it important because if you do a closer observation here, you realize that this green channel was first initiated somewhere around year 2020 till about 2021 before correction happens here in year of 2022. Well, if you remember that during 2020 to 2021, this was happening during post-pandemic era in which that semiconductors were in high demands from remote working, cloud computing to gaming that gave this stock Micron a huge boost in its price, creating a strong medium-term uptrend green channel. And somehow that this green channel were further reinforced. Now take a look here in 2022. There's a dip, corrections, and then it's further reinforced until today, 2024. And this can only happen because Micron did a business pivot towards AI-related memory chips and data center solutions that presents a significant growth opportunity. So for traders today, when you look at the plunge of 16%, now let's take a look at where the price is sitting today. Today price is sitting at the $87.09. So probably you might have questioned whether the price has concluded a bottom here. And also that probably some of you might have a concern over the geopolitical uncertainty coming from China. And let me first address that concern if you have. Now, just let's take a look in somewhere in the May 2023, somewhere around here. So it seems that from the price valuation here that the market didn't overly concern over, well, I would say the geopolitical uncertainty coming from China. And let's take a look at the price today and try to understand and analyze whether the price has been undervalued somewhere in the bottom or not. Now, coming from the highest high over here somewhere around June 2024, the highest is, I think, about $155 and it drops to about maybe I would say $90 level. So the dip was about 40 to 45%. And looking at the price drop yesterday is about 16%. So the next question would be, well, where is the next move of the stock price? Well, there are certain possibilities here that if the stock, if the valuation can hold around this level, around, I would say, $84 to $85 level, then there's likely, I would say, that you will see a nice rebound over here and then the price start to test the first resistance around $100 price level. However, if it failed to rebound, then probably the stock will drop here to $80 or even it possibly drop further down below $80 level to join back to the inside this black channel line. So to understand the possibility of the movement next of this price, of the stock price, we would like to see, first analyze the sentiment. So we need to evaluate it from the volatility small chart. So let's take a look at the next page. Now let's take a look at this implied volatility small chart. And for those of you kind of new with the chart, let me try to explain about how to read the chart. Well, this y-axis represents the level of this implied volatility. Then the x-axis represents the strike price. The bottom here represents the volume of transactions or the activities. Then the blue dot represents the put options and the red dot represents for the call options. Now, let's take a look at this chart first. Do you notice that there's the high volume here together with the elevated implied volatility around, I would say, $87 to $89 strike range? So I would say that this first indicates traders are pretty confident that the stock price will rise above its current level. And this also suggests that many believe that the stock is on the path to a rebound. Now, the increasing IV over here for the stock price above $95 strike level, I would say that this suggests there are speculative activities or expectations of a significant upside movement. And there is also a further conviction coming from, I would say, a more call options being bought at the $90 strike level and significantly at the $100 a strike level. So I would say that this shows there is a significant growing interest in a possible rally. So traders seems to be positioning themselves for a rebound or even a continued rise in the stock price in the near future. Now for the put options, the concentration, you can look at the volume of $80 strike level here. So I would say that this is showing interest in hedging against the downside risk. It's kind of like a normal activity here. So looking at the relatively lower implied volatility for the put options around the current price today, so this appears that the current drop of the 16%, well, I would say it did not trigger panic to traders yet. And that is why I would say this is where the opportunity comes. Now, let's take a look at the volatility trend chart to further confirm the current sentiment. But before that, let's take a look whether or not there is any smart money entry opportunities. And to do that, I'll be using my proprietary system called Trader GPS. Now, some of you probably asked these questions. Hey Rein, why it is so important to identify the smart money entry opportunity? Well, the answer is actually very simple. The smart money is giving a systematic cash inflow in which very often it drives price higher with relatively lower risk. So this provides us as a traders with a chance to capitalize on potentially profitable trades with lower risk. Now let me show you on how to identify these smart money entry opportunities with Trader GPS system, and also how simple and easy to use these information to make your trade entries. Now let's take a look at this page. Now, to activate this Trader GPS, I would say it's very simple with a click of button, and then the system will help us to compute and evaluate whether or not any opportunities, smart money opportunities, will come to join the stock to drive the price higher. Well, your job as a trader is very simple. You need to help yourself to identify these green arrow pointing upward, because that is where there's a potential of smart money coming into the stock and drive the price higher. Now let's take a look at the first exercise here. So if you successfully identified this bar as your entry price at around $90, then you could sell it at the peak here around $130. So you have a potential to make around probably about $40 here. So your potential return about, I would say, 45 to 50% return. All right. Now let's take a look at the second opportunities here. So assuming that you successfully identified this price level at the 125, and then you join together with this smart money opportunity, and you successfully sell it at a higher price around $155, then I would say that you can easily make about 25 to 30% over here. So this is the reason why a lot of people love to identify the smart money opportunity, because it's easily drive the price higher. And what about the risk? Now let's take a look at the next opportunity here. Well, on the third opportunity here, apparently that the smart money failed to drive the price higher, or maybe failed to join. Therefore, there's a correction, or there's a slight drop over here. But as you notice that the drop is slightly, means that your risk is kind of limited, so you are exposed to so-called a slight loss. All right. So again, this is why I did emphasize that by finding this smart money opportunity is so important, very exciting, because you have a very potential big upside with the relatively lower risk. Now, as per today, I would say that the system has not yet identified any smart money opportunities yet, but I believe if rebound happen, then subsequently on the next day, probably the green arrow will appear, and as traders, then we just need to identify these opportunities, then do slide analysis, then probably would like to join together with this smart money opportunity. As simple as that. All right. So well, I would say that for those of you who wants to know more about Trader GPS system, about how this works and how these smart money entry opportunities can help traders trade smartly in the stock markets, then you can check the description on the link below. Now let's come back to this implied volatility trend chart, and for those of you kind of new with the chart, let me try to explain about how to read this chart. Well, this y-axis represents the implied volatility level, whereas the x-axis represents the date, the red color here represents the call options, and the blue line represents the put options. And when you read this chart, I would say that there is something funny is happening over here. Now, when you observe that the IV trend or the fear trend over here keeps climbing up until to the point or to the date there is a sharp decline in the IV, and apparently this is the point or the date when there's a big plunge of the stock price of 16%. So I would say that on the contrary, that this significant price drop over 16% apparently has alleviated much of the fear surrounding the stocks, as reflected in this sharp decline in the implied volatility trend. And also that a drop in IV, I would say that this typically encourages investors to buy the stocks, which potentially driving the price higher. So I would say there's a potential rebound over here. Now, furthermore, there's something important also that you want to take note, that when the drop happens, that this put implied volatility, the blue color, decreasing more steeply than the call option here, the red color. All right. So this tells you that, or reinforces that, the bullish sentiment is coming on the stock. Now, the bullish sentiment in the market today indicates that there is a potential rebound for the stock, with a possible short-term rally aiming to test around $100 price level. So I would say that this is an opportunity for traders to take advantage of this upward momentum to profit. However, it's also important to note that if this rebound fails, then the stock probably will drop to around $80 level, and this could trigger panic and lead to further selling pressure in the markets. So, well, that is all the analysis I have for Micron today. And if you believe that my sharing is useful, please give us a thumbs up, subscribe, and click the notification so you don't miss out any good opportunities. And also, please leave any comment below if you want me to analyze your favorite stocks whenever the opportunity comes, so I can share more smart money insights for you. See you at the next ones, and trade smart.